Recently, the Unrivaled Nation on our exclusive Discord server, we were talking about serial acquirers and their potential to generate tremendous returns over time. In this video, I'm going to provide an overview of Constellation Software, very high level overview, but there's a strong appeal with these serial acquirers, these companies that just constantly acquire other businesses, because if it's done right in an intelligent and disciplined way, it can generate absolutely amazing returns. And let me talk to you and educate a little bit for those that aren't quite familiar. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. So let's first do a quick understanding that one of the most famous serial acquirers is arguably Berkshire Hathaway, generating over a 3 million % return during Warren Buffett's tenure. I mean, he was buying everything from Dilly bars, Dairy Queen manufacturer, to, the train tracks, Burlington Northern Santa Fe. And so his, the appeal of Berkshire Hathaway was that he found a business model, which was insurance, but, he's also done it previously with banks as well, where he looks for a business that builds lots of cash and then can use that cash to acquire other businesses. And you create this sort of snowball effect, hence, the name of his biography, Snowball, where it's just using these profits of these different, acquisitions to then fund more acquisitions, hopefully at compelling prices. And so this is how Warren Buffett has generated his tremendous returns, is, this one snowball after another, partly driven by the float with the insurance operations. But you look at Constellation Software, Cnswf, following quickly in Berkshire Hathaway's footsteps, generating over a 3,000% return over the last few decades. It's led and founded by Mark Leonard, a billionaire many times over, who's purchased hundreds of companies on behalf of Constellation Software. And this may make you wonder, okay, so what makes Constellation Software so special? And so I think I'm going to try to boil it down to a few key ideas. First of all, it's decentralized. So unlike many other companies where you acquire something and then you sort of force it to fit your system, and then you try to, sell your ideas and, change the culture, here it is. If something's working, if it's not broke, don't try to fix it. And so the appeal of this decentralized approach is that you have many, dozens and dozens of different subsidiaries, and they each are focusing on just winning in their respective markets. And so this means you're both more diversified because you have all these different revenue, free cash flow streams going into the business, but you also have less risk from a concentration perspective, which is you're looking at, costs that typically you have a lot of general and admin expenses when you have a centralized business. Okay, we have this one centralized hub and that dictates how everything operates. When it's decentralized, your cost structure is also much lower. So you're talking about a diversified revenue base as well as arguably a lower cost structure if it's done right. If you can let these separate entities continue to run and operate intelligently. And so decentralized is a key aspect of what makes Constellation special. Another key aspect, this is not like Berkshire Hathaway in that they're not focusing on the insurance market, where, Warren Buffett is figuring out different types of insurance, reinsurance, auto insurance, general, insurance. He's not looking at, property and casualty. He's not, that business model uses the premiums from customers to create this float. And then he benefits from that float over time, where, if he pays out, let's say 99% of the premiums he collects and is able to reinvest that float into bonds and stocks, he can do really well over time. My largest personal holding that's up, well over 100% since I called it out to my subscribers here at Unrivaled Investing, that's an insurance company. And so if you find the insurance company right with the right culture, you can do very well, over time. But that's not what Constellation's doing. What Constellation is doing is they're targeting vertical market software. So they're targeting niche software providers of mission critical products, often representing a tiny fraction of the cost of doing business for their customer. So that makes them very sticky, because the customers go, it's just pointless to change this out. It's a small cost of our doing business. And it also gives Constellation, via their subsidiaries, pricing power. And that's a key part of their playbook, is you're buying these businesses that are expected to be able to raise pricing in the future. And as an example, very recently, they announced, and you're going to see a lot of this if you're going to try to study Constellation Software, you just see them constantly acquiring new things. For example, Constellation Software In December, through a subsidiary, they acquired MedHost, a leading electronic health record solution provider. Whenever you hear electronic health record solution provider, you know you're dealing with something that's very sticky and would be painful to rip out. Medical records, do I really want to unplug this for my patients or doctors and hospitals? Whatever, their 5% price increase, their 10% price increase. You just stomach it and you move on because you got to keep running your business, and this software is so critical to running it. And so this is just an example, one of many examples, literally hundreds of examples that Constellation Software has done. The key aspect here, and I think this is also what's going to set them apart, is that this is an extremely disciplined company. You can see that with share issuance. This is not a company issuing a lot of stock. You look at a lot of what goes on with Silicon Valley, and they think, oh, we need to align our employees. We need to issue a ton of stock. That is the exact opposite here. Here it says, oh, okay, well, if you want to partake in the Constellation, rocket, you need to buy your own darn stock. We're not gonna give you stock in some sort of weird, dance of like, oh, okay, well, here's your compensation in stock and it's actually worth this. And no, if you want to buy it, you can go buy it on the exchange, and we're not issuing new stock. So you see they're stable, their stock, their share issuance, shares outstanding, very, very stable over time. You're talking about another key aspect, which is that they are extremely disciplined on the hurdle rates and the valuations in which they're willing to pay. You're not talking about things where they're saying, hey, we're going to pay 20 times EBITDA or 20 times sales. That's not what they're looking at. Oftentimes you're talking about businesses, these small niches that it's like, oh, one-time sales, very small, what you're looking at, or very reasonably priced. And also cost management, where management says, hey, we're not going to, spend just ridiculous bonuses on employees. Or maybe what, the founder, Mark Leonard, he's talked about, I think, even paying some of his own airfare, in the past, because he wanted to, ride first, on his plane, or, he didn't want that cost to be shouldered by shareholders. So you see just tremendous discipline. The question is, where does Constellation Software go from here? In full disclosure, this is not financial advice. Also, if you're looking for compelling investment ideas, consider Unrivaled Investing, which includes a weekly letter and my personal portfolio updates in real time. We also have an exclusive Discord community where I will personally let you in and discuss your questions, available exclusively for premium annual subscribers. That's at unrivaledinvesting.com. Looking at Constellation's latest results, you see revenue grew 23%, which is incredible to see this continued growth. But you see that it's mostly driven by their acquisitions. You see 8% organic growth, 6% after adjusting for foreign currencies. So that delta, that 8% to 23%, that is from their acquisitions. Okay, so you're talking about 15% growth from their acquisition. That's super important for investors to consider. And that's what's been driving this stock over time, over a multi-year perspective, is understanding. Looks like my picture got froze there, but this company is driven through acquisitions and finding more and more companies. And so this is just, in my mind, a very typical, press release where you see, okay, organic growth is going to be single digits, revenue is going to be much higher. And then it's driven by continually finding compelling deals. And to the extent they can find compelling deals, like their recently, completed Optimal Blue business from the Intercontinental Exchange, so if you find this motivated seller and you can pay, let's say, under 8 times EBITDA, and you can lever it up with some debt, you can generate very compelling returns. And so they say, look, we made this acquisition, which was quite sizable. And then we also made, a number of additional acquisitions for aggregate cash consideration of $187 million. So there's a lot of detail here that you're going to have trouble getting into. So if you want to just keep diving in, it's sort of like Berkshire Hathaway. You're not going to be able to peel it back across many different layers. You just sort of have to do one at a time and sort of say, okay, what does this company look like on a high level, and do you trust management? And looking at that cash flows, their free cash flow is up 60% year over year, which is very compelling. The question is, where does it go in the years ahead? So here's a hypothetical framework for thinking about the stock. I personally look at it, they're growing 60% this year. That gets you to around $1.3 billion in free cash flow. It's going to be lumpy. Some years it's going to be down a little bit. Some years it'll be flat. Some years it'll jump. And so looking at their free cash flow, it's trading around, let's say, 40 times free cash flow. Maybe if you're looking out a year, maybe 30 to 40 times free cash flow. This is not cheap. So this is clearly management saying there's a lot of potential. This is clearly the market saying there's a lot of growth that's going to be delivered in the future. And this is what puts me a little bit on edge with Constellation, is that, yes, arguably there could be over 100% upside, but it will require continued excellent execution, 25% annualized free cash flow growth, a 33 times multiple 5 years out, just to get to 140% upside. I personally would rather see a situation where I can assume, let's say if I'm assuming 15% growth and a 23 times multiple 5 years from now, that I'm penciling out even more upside. So I think I'm just saying is I'd rather look for things at a lower valuation, and I call things out that are growing at comparable clips, or have in the last few years grown at very strong clips, that just trade at a fraction of this valuation. So I think this is an example of investors loving this business, loving Mark Leonard, loving their track record, and saying, I just want to hop on board. Plus, it's very clear they found a lot of acquisitions recently, so maybe their free cash flow will continue to jump. So I look at this, and I'm not going to pull the trigger based on where the stock price currently is. It wouldn't surprise me if it goes up over 100% over the next 5 years, but it also wouldn't surprise me if the stock is dead money for the next 5 years as well. Because, in one scenario, if they only compound at 15% and have a 23 times free cash flow multiple, then you're close to break even over those 5 years. So it's important to recognize if there's any sort of valuation compression over the next 5 years, it could be a headwind for Constellation Software. And of course, look, stock prices go way higher, way lower. A lot depends on that sentiment. I think another key aspect that investors should consider, let's see if the camera's working now, is this idea of AI potential disruption, and that it's concerning as an investor potentially in Constellation Software that it's getting easier and easier to create software, particularly with AI. And so is there a possible near future where you start seeing some of their customers say, hey, you can't raise prices, you can't make that easy cross-selling or upselling opportunity, because we might just build it ourselves at a fraction of the cost using AI. So I just wonder if that's a risk on the horizon, this disruption risk. We will see. So far, they've done an extremely fine job navigating the challenges that they've faced, and I would be eager to revisit Constellation Software at a lower valuation. I hope this video talking about Constellation Software and serial acquirers more broadly. We're gonna talk about serial acquirers in greater detail. I'm thinking about doing some follow-up posts exclusive to the members, the nation at Unrivaled Investing. I hope that this video has been helpful for you. Thanks so much for tuning in.